Time now for an in-depth look at the market news on this New Year's Eve. And for that, I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, thank you as always for coming on today.
Thank you for having me today.
Well, the rally on Wall Street couldn't go on forever, of course, and stocks were down on Monday. They'll be trading, though, on New Year's Eve, unlike Korea. What's the story today in the global markets?
Sure. As you said, the overall market did some correction. That's because of such a strong movement that occurred over the last several months. If you look at the year-to-date numbers, Dow was up 22.01%, and S&P is up 28.5%, and Nasdaq is up 35%. And just the 1 month period, last 1 month, most of these indices were up anywhere between 2.5% to 4.5%. So that's why we needed some correction. If you look at the one of the major indicators in terms of the sentiment, the fear and greed index, that numbers were coming in well above 90, which is a very, very greedy period, and therefore we needed some correction. If you look at some of the sectors that did correction in yesterday's market movement were the bio sector and IT sector, and also one of the major, developing market called Argentina. And if you look at most of these indices as well as the sectors, they corrected more than 1.5% or so. We think that was needed in order for the market to further go up in the future in a longer term basis. But in a short term, you needed some technical correction in order for the better next year.
Right. Well, in the new year, in the first week of it, the U.S. and China are expected to sign phase 1 of their trade deal. That's priced into the outlook for equities next year, of course. But what's your outlook for Korean stocks, and what in particular should we be watching?
Right. As you said, most of that positive news will probably apply to most of the global equity market. But as for the Korean equity market, we think that that might have a more positive implication in the future. Because if you look at the Korean equity market, year to date, it is only up by 7.67%. And if you look at the last 3 years of performance, Korean Kospi is up only 8.45%, so barely moved in the last three years. The reason for that is because of the Korea's long-term prospect and economic growth rate have slowed down to 2% territories. And also the global factors, the global economic growth rate also slowed this year. So as being a very export-oriented country, the earnings growth were not good this year. That has affected negatively. However, though, if the trade deals are made, then the overall export numbers should recover. If that's the case, the earnings for the Korean company should recover as well. And because of that, we think that the next year's prospect could be positive. Hopefully, we will see a global economic recovery happening next year from current 3% territories to 3.5%. If that actually occurs, then that will be definitely positive news for Korean equity market.
Well, zooming out a little bit, on the macro level, we saw consumer prices in Korea rising at the slowest pace since records were first compiled in 1965. If this goes on, there are concerns about deflation. Do you think there'll be a recovery in that regard in 2020?
I really hope so, but the numbers are not looking that good. If you look at, as you said, in November, the inflation numbers gained only 0.2%. And in December, it did recover somewhat, but it's only up by 0.6%, which is well below 1% territories. And also the target inflation rate of 2% is not met. The main reason for that is because Korean equity market's long-term prospect is slowing, particularly if you look at the consumers. If you look at the consumers' overall loan as a percentage of GDP hit as high as 93% territories. If that's the case, then consumers probably cannot consume as aggressively as before. If that's the case, then deflationary pressure could actually happen. So what we have to depend on is what's happening to the export. If you look at the export numbers, it was down quite significantly by almost 2-digit growth rate negative. If hopefully that should recover in the future. Also, even though the currency has depreciated much, inflation numbers are coming in such timid, that means that domestic demand is very weak. Hopefully, global economic growth rate should have positive trigger effect to the domestic consumption. Hopefully, that should have some stabilization to prices. And if that's the case, then equity markets should do okay in the future. But nevertheless, as you said, there is concern about deflationary pressure. We need a much more aggressive monetary and fiscal policy from the government.
All right, Mr. Yu, that'll have to be our last conversation for 2019. Thanks so much for coming on every week, and Happy New Year to you.
Thank you very much. Happy New Year.